Hello everybody, a little bit of a different video today. This video is about Cathie Wood. Cathie Wood, the head of ARK Invest, and I'm specifically gonna talk about her ETF, how she's doing, and is she making a comeback? Because she is making a comeback, and I think this is going unnoticed. In fact, if you look at the ETF I'm gonna talk about, the highs were the 180s, and it's in the 130s now. So we're coming close, and so I'm gonna go through my quick thoughts about Cathie Wood, and then I'm gonna go through the assets, the top assets in the ETF, and what I think about each of these top assets. So let me begin and be very clear. I'm a big fan of Cathie Wood. Her picks are definitely riskier than my picks. She's fearless, she's hopeful, and the best way I can define what she does is kind of a moonshot strategy. Like she will take the most asymmetric of asymmetric bets, and many of her companies went to zero, but that's because it's a moonshot. It's very close to a VC. The only thing riskier than her type of investing would be a VC, where a VC you expect almost everything to go to zero. She takes a much greater amount of risk in her picks, and she tends to enter the picks more early. And what I notice about a lot of her picks is that they have a cash runway, and if they run out of cash, sometimes they can go bankrupt. She tends to buy them when EBITDA is negative, when you have negative 150% margin. So she's definitely higher on the risk curve than I am, much higher on the risk curve than I am. But it doesn't mean her strategy doesn't work. I'll get to that in a second. Actually, she's done so much to legitimize growth investing in Wall Street. She was a star of the media in the 2021, 2020s. And then, of course, she got ridiculed by the media, and now she's not invited anymore because I guess she doesn't draw clicks anymore, as obviously this video view count is going to show, but that's okay. I do this video for me too. So I want Cathie Wood to win. I have owned her ETF for over 5 years. I want Cathie Wood to win just because even though I disagree with not a lot, but I disagree with many of her picks. Even if I do that, I still want her to win. I want her to win because she's done a lot for growth investors. She's legitimized growth investing. I've owned her ETF for more than 5 years now. And how is it doing? Thanks for asking. It's actually doing pretty well. If you look at performance, we're close to back to where we used to be, it's very easy for people when ARKW was trading, in the 50s. It's very easy for people to not zoom out and to not look at the long-term return. By the way, the ETF I'm covering is ARKW. It's well documented in the ARK ETF world, in my view, that the ARKW is the better ETF. I've always found ARKW as the better ETF, better composition, and Bitcoin, especially Bitcoin. It has Bitcoin, which is a big deal. But anyways, if you look at the performance of the ARKW ETF, which is our second biggest ETF, if you look at the performance, like I said, thank you very much for asking. The past 10 years. The Nasdaq did 18%. Let's call it. She's at 21.5%. So Warren Buffett, I know Warren Buffett likes to make these bets that you can't have an active manager that beats this S&P 500. Well, I just found an active manager that, since the founding of her ETF, that active manager has beaten the Nasdaq, not the S&P, the Nasdaq. She's beaten the Nasdaq. And, this is no surprise when you're going to see the assets in there. You got Bitcoin. You got a big proxy for Bitcoin. You got Tesla. You got another proxy for Bitcoin. So, of course, she's outperformed the Nasdaq. So let me just go ahead and talk about the picks, talk about why I own in a separate account. I own this ETF. I've owned it for 5 years, more than 5 years now. More than 5 years. I'm in the green. I'm happy. I know a lot of people are upset because they sold at the wrong time. This is when you read studies about investing, you can find that a lot of assets win, but people just sell at the wrong time and they get upset. Anyways, let's talk about the first asset. First asset that she owns in the ETF is Bitcoin. on this channel what I'm going to say about Bitcoin. I love Bitcoin. I think Bitcoin is an escape from fiat. I think it's the black hole. I think it's the siphon that will take over all fiat, in due time, decades probably, right? But she owns her own ETF. And that's fine. She was one of the winners of the ETF. She was one of the early ETFs. That's fine by me. It doesn't make a difference whichever ETF she owns. She might as well support her shop. I know some people get upset with that, but I really don't care. Of course, you know my view. I would much rather see MicroStrategy in there than Bitcoin, because I believe that if you're going to own Bitcoin, it's much better to just own Bitcoin outright in a private key. But that's because I'm an old Bitcoiner. Actually, Cathie Wood, she got into Bitcoin at about the same time that I did back in 2015. She bought 100,000 back then worth of Bitcoin. It's worth like 7 or 8 million now, something like that. Except contrary to me, she didn't sell it. She didn't fall for the FUD. Which I did. So I sold my Bitcoin at $250 a coin back in those years, more than 10 years ago. I had to buy it back many years later for thousands of dollars. But she didn't, right? And that's why this conviction is so important. That's why I'm so happy to see her still own Roku, for example. This is what some people call the tin can strategy. You get a stock, you put it in the tin can. If it goes to zero, it goes to zero. You don't care. If it goes to $1 million, you let it go to $1 million, but you just buy it and you ignore it. That's the tin can strategy. And surely she's held stocks to zero, like NVT, for example. That was one that she held to zero. But anyways, that's the point of VCs. That's like she's a little less risky than a VC, but she's still way riskier than the type of stock that I cover on the channel. But her top stocks here, I think, are interesting. So Bitcoin, obviously, my stance. I love MicroStrategy. Let's talk about now something that is very interesting. I need to do a full analysis on Coinbase for this channel. Again, I had done one a long time ago. The problem is Coinbase is a complicated business to analyze because it's not only an exchange, it's a Deribit now. They do options. It's an institutional access gate. It's a holder of Bitcoin for the Bitcoin ETFs. I think they own all but one of the Bitcoin ETFs. They hold the assets for them. There's staking. There's crypto. There's Ethereum. It's essentially the layer 2 for every Ethereum transaction. They essentially run Ethereum. I mean, maybe I'm exaggerating, but not really. They got so much going on at Coinbase. Oh, and they are a BTC treasury company too. They own the Bitcoin. They have Bitcoin on the balance sheet. So this is a complex stock to analyze, but I think a key development of Coinbase recently, besides the S&P 500 inclusion, which was a big deal, I think a key development is the Circle IPO. And if you see the success of a Circle IPO, you can see there is a lot of appetite in the market for public stablecoin issuers. And so, this article right there is saying that, Circle could potentially acquire the other 50% of Circle, and just Circle could be Coinbase, and Coinbase could be USDC. If you know anything about USDC, so USDC, we're talking about stable coins here, right? USDC. USDC was started by Coinbase and a consortium now called Circle, and they both started it in 2017 or 2018, something like that. This is USDC, by the way. You can see it always trades at $1. It's always $1. And there's 61 billion worth of USDC circulating right now. And essentially, through that partnership and through being one of the founders, Coinbase being one of the founders, essentially 50% of the interest generated by the bonds backing USDC, that 50% goes to Coinbase. And I think they have a separate agreement where if you have USDC on Coinbase, it's not 50% that Coinbase gets, it's 100% that they get. Something crazy like that. And so, of course, make no mistake, Tether is the bigger brother of Circle. It's the bigger competitor. But is there room for two stable coins in the world? Is there room for USDT and USDC? Probably, especially because you can just swap them anytime. So there's probably room and equivalency, and you can probably imagine at some point there will be like a second order token who may just swap between them. Anyways, that's not my point. My point here is, what if what if stable coins are going to have widespread adoption, which I think they will. I saw pictures on the other day on Twitter of countries in Latin America just writing prices in stable coins. So if stable coins become a major thing, well, there's going to have to be trillions and trillions of dollars of stablecoin, because the circulating money in the world, my estimate is it's still $50 trillion or something like that. So that money, if it's held in stablecoin, well, that's going to be a very big deal, because, of course, a stable coin, a dollar bill, does not earn interest. But who earns the interest on that? Well, it's Coinbase who earns the interest on that, and Circle, 50-50. And so you can see how it can scale to an enormous amount of money, especially if you are bearish on interest rate, which I'm not. I think interest rates are going back to zero. But if you're bearish on interest rates, I think this could be a very big deal. I personally like stable coins to be backed by Bitcoin, and maybe the issuer of a stable coin just earns the yield on the Bitcoin. They just earn 30% and they give 0%. That's another playbook. That's a playbook that I would like to see MicroStrategy do. But nonetheless, we can't ignore that if 10 years down the road, let's assume Coinbase acquires Circle, and let's fast forward, not 10 years, let's fast forward 5 years down the road, and you end up having, say, $1 trillion of stablecoin on Circle, and let's say the rates are still 5%. Well, that's $50 billion of profit in this scenario, and that's not a far-fetched scenario. Stablecoins are growing very fast. They're getting adopted very fast, especially outside of the West, where people live in countries with sinking currencies. So, and this is a playbook of Sailor. Sailor's always said that this is kind of a blessing for the US dollar, because much of that money is going to go into bonds. Unfortunately, I wish it went into Bitcoin, but anyways, that's okay. So let me move on. Tesla. I'm not going to comment on Tesla. Tesla is the commentaries I get whenever I say anything on Tesla on this YouTube channel is nuts. I like Tesla. I think it's the leader in real-world AI. I think their self-driving solution is superior to the Waymo alternative, although I do own Google too, so I have some Waymo exposure, but not nearly as much as Tesla, so it doesn't matter. I love Tesla very much. I don't see it as a car company. I think a lot of the misunderstanding with Tesla, of course, comes with people seeing it as a car company. To me, Tesla is nothing but a car company. In fact, I think they will compete, give a really hard time to Uber. But I know a lot of people disagree with me on that, and that's okay. That's perfectly fine. The only thing I'll put out there, I'll zoom even more for you, is the return of Tesla, despite the nearly 5 years of despair that we've been going through, the 5 years of FUD that we've been going through. Guess what? We are still sitting at 42% return, average annual return, over the last 15 years. So the Nasdaq, over that same period is 18%. So pretty nuts for performance of Tesla compared to the Nasdaq. Yeah, you have Tesla, you have Nvidia with very long-term return performance in this range. Right, MicroStrategy, of course, has more than outperformed Tesla, but it's a much shorter-term performance. It's only over 5 years, over 15-year periods. Well, over a 15-year period, I think of Tesla and I think of Nvidia. That's who I think of, right? So anyways, it's a very special asset in my view. I know people disagree with me. Robinhood. Let's talk about Robinhood. So Robinhood, I own a teeny tiny position in Robinhood, way too little. I acquired it at around $10 or something like that. Never selling, but annoyed that this is going to be a meaningless position for me because it's so tiny. Let's talk about Robinhood. Robinhood is the broker of the future generation, in my view, or of our generation. Well, it depends. Doesn't matter. It's my broker. When they did the 2% match to move your assets from all of the other brokers, you could move your assets and get 2%, and they run 2 to 3 promos like that a year. Like who's not gonna take advantage of this promo? If you have $1 million and you transfer to Robinhood, they give you $20,000 just to transfer. That's a 2% match. Of course we are growing asset under management so fast, 250 billion in asset under management, and we're going after the more sophisticated stock owner, right? They introduced their trading platform recently. They're introducing a private banking platform. Think about that. They're launching in September, private banking. Think about that. So what does that mean? It means that you're gonna have a lot of wealthy Americans who I don't know, they may be looking at a free house if they move to Robinhood and get the 2% match. They may be looking at a free house, right? So if I were Schwab, if I were Fidelity, I would not be sleeping well at night, thinking that there is this company who understood that marketing is not the way to go, who understood that it's better to take the money and give it to the customer instead of spending tens of millions of dollars on an advertising campaign. Take that tens of millions of dollars and give it back to the customer, right? They did the same thing with 3% back credit card. It's a success because it's 3% back. They don't need marketing. They have a wait list 10 times longer than what they can provide. They don't need when the product is so good, you need no marketing. Robinhood does very little marketing. Oh, and the UI is a dream come true. The Robinhood UI is absolutely the best in my view. It's the best UI. So sure, there's a few issues with Robinhood, like they don't take OTC stocks, they don't have preferred. They're missing a few stuff, but they're building it, and they will. And frankly, I have a hard time seeing a new platform take over Robinhood. Very hard time. And because of that, they rose with the phone. They rose with the technology platform of the smartphone. They were the first available on smartphone. So until we get another technology platform, I don't see why Robinhood wouldn't keep winning. At least in the world of stocks. Maybe 10 years from now we talk about Robinhood and Coinbase competing together. But we're not there yet. So I'm very positive about Robinhood. I think Robinhood is a great stock. Let's talk about Roblox. Okay, so Roblox, I think, is also a really great stock, but I wouldn't know how to analyze it. This is obviously not my generation. I don't think any of us' generation. But what is Roblox? Roblox is the YouTube of video games. They don't call them video games, though. They call them experiences. But it's the YouTube of video games. They have, I think it's millions of games. I'm pretty sure it's millions of games on there. And it's the very definition of exponential growth, but misunderstood exponential growth. The main thesis is that right now, all of these quote-unquote experiences, like you can go to a virtual Walmart or a virtual concert or a virtual clothing store, or you can play whatever game, and whenever you have like a news event, for example, there's a new game related to that news event added on Roblox. It's kind of crazy. It's literally the YouTube for the video game YouTube, the YouTube for video games. So anyways, the point is what Cathie would think, what I think too, is that Generation Alpha will likely continue to use their platform. As they turn 18, they will likely continue to use their platform, and this is already happening. You already see people turning 18, 19, 20, and they spend a lot of money on Roblox. They buy a lot of Robux. They do all of these experiences, and they create games. It's part of the whole experience. It's kind of like an Instagram. A lot of people have Instagram, but they also create content on Instagram. It's a back and forth. So it's really the YouTube for a video game. Maybe you mostly play games, but maybe you're gonna create a game, and you're just gonna earn Roblox by creating your own game. So I think a lot of Robuxes are going to be sold, because I think that YouTube of video game is going to keep thriving, and it's available on all the gaming consoles, and the Gen Alpha is addicted to it. They seem to be addicted to it. Those Robux gift cards you see everywhere. So it's an impressive story. I need to do a deep dive on it, if only I had time. The problem is I'm not privy to any information on this. I don't know. I don't have kids, so I don't know. Like if I had kids, maybe I could find out more. If you have kids, ask them about Roblox. This reminds me very much of the time on CNBC a few years back. They had a 12-year-old go on CNBC explain what Fortnite was and how he had sold a Fortnite sword for hundreds of dollars. Anyways, this is something I think Wall Street is myopic on. Because it's our blind spot, and it's my blind spot too. It's like video games, and then you go into that's more of a blind spot. But anyways, Roku. Let's talk about Roku. Okay, Roku. I have to say I may disagree with Cathie Wood on this one. It's America's leading TV platform, and it's only worth $11 billion. So I guess I understand why she would be interested. It's only $11 billion. You know, big tech probably sees a much greater valuation on their TV operating system. But anyways, Roku confuses me. I think Roku is probably better than Netflix because Netflix valuation is through the roof. And Roku, of course, does its content. They have their channels, etc. But I don't watch shows or TV, so I'm not fit to analyze this space. You know, I don't have Netflix. I don't have any subscription, so I'm not fit to analyze this space. But I do see risks. You know, my main streaming platform is YouTube. So anyways, that's one risk. But I do see a risk with AI-generated content. What's going to happen if all content is AI-generated? And more importantly, is the TV platform going to remain? When I study countries like India, for example, when I look at what's happening in a lot of the world seem to be a phone-first entertainment. If we move to a phone-first entertainment, well, I think investing in the TV operating system may be a little off. Then again, you know, I'm just gonna need to use my out of the game card. I don't know. The truth is, I don't know about Roku. So because I don't know, I wouldn't touch it. But you know, it's only 5% of the portfolio, so I guess I own it. Hopefully, it's good. I hope it's good. And the last one is Palantir, Shopify, and Meta. And I put them all together because there's not much for me to say. You know, Palantir. I own Palantir. They're a leader in AI next to Google. They are both a military contractor and a provider of AI to companies, of, you know, entirely rewriting management systems, enterprise resource planning systems, entirely rewriting them from scratch, extracting value. I think Palantir is a very impressive company, of course. It's a very expensive stock. I would not buy it at this level, but it's one of the stocks that fit in the bucket of the best at any price, right? Tesla, you could say the same thing. Tesla is the best at any price. Coinbase, you could say the same thing. A lot of the Cathie Wood stocks, you could say the same thing. Aside from maybe Meta. Meta, you could argue, is not that expensive. Shopify is fine. I've covered Shopify a long time ago on the channel. It's a steady Eddie tech stock. It grows faster than Amazon, but, you know, it's more expensive than Amazon. So, anyways, Shopify is entirely fine. And then Meta. Meta is fine too. Meta is just a little too growth for me. So I don't have much to say about Palantir, Shop, or Meta. I don't have much. I do think Palantir is going to have the highest alpha out of these three. Still, a lot of people are waking up to Palantir, and it's true that it's been uncanny. It's been quite insane how able they have been to just stack contract after contract after contract. They just get all of the contracts at Palantir, which is stunning. They do these boot camps, and then you have people buying the software in droves after the boot camp. So the little bit that I follow about Palantir really makes me sleep well at night. It makes me sleep well at night. And then you have an amazing options market on top of Palantir, built on top of Palantir. So you have kind of a Saylorization of the stock where the stock is expensive because it's worth it to a lot of traders who are going to be writing options on the stock. So that volatility in the stock is actually very helpful to Palantir and sustains an even higher stock. So it's a special company. Anyways, I'm done with this video. This was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.